This is the third year that we've conducted this survey, and we look forward to doing it every year because it gives us some evidence or corroboration as to what we're actually hearing from retail companies on a day-to-day basis. Last year, retailers were much more optimistic than they are this year. This year, they're concerned about the direction of the economy, about unemployment, about consumer sentiment. It's really interesting that despite being so pessimistic about the economy as a whole, 60% of our respondents predicted that their sales will grow over the next 12 months, and only 9% predict that their sales will decline. Commodity prices have been a big issue the past year. Certain commodities and raw materials have been rising like cotton, although that's moderated somewhat the past couple months. And of course, as we all know, energy costs have been increasing. Healthcare costs and regulations are weighing quite heavily on the minds of retail executives. Nearly 2/3 of our respondents believe changes in healthcare costs and regulations will have a negative impact on their businesses, and only 6% thought it would have a positive impact. Our study pretty much confirmed everything that we've all been reading about social media and how important it is to our economy, and particularly retail. Our respondents, by and large, are shifting dollars away from old media to new media. What we've seen actually in our own portfolio and with respect to the companies that we look at for new financings is that some of the better performers, or actually most of the better performers, are the ones who have been ahead of the curve, the ones that got into e-commerce earlier, the ones who have embraced digital strategies in terms of their marketing of their products. Retailers are cautiously optimistic about this year's holiday season. 37% of executives predict an increase in last-minute shopping, while 38% expect post-Christmas shopping days to be stronger, and we've seen that trend the past few years. Retail has been an important part of CIT's business for decades. We like to think that retail is in our DNA. We've been lending to the retail industry. We're a provider of capital, both through asset-based lending as well as factoring through our factoring division. So it's important for us to follow this industry, and we do these surveys every year so we can better understand what the thinking is in the heads of the retail executives whose companies we finance.
To download the CIT Retail Finance Outlook, please visit cit.com/Retail Outlook 2011.